Vietnam economy. The next China? Vietnam's exports have increased dramatically in the last 2 decades, and during the same time period, their GDP per capita increased dramatically from 3 to 4. This is likely the only Southeast Asian country whose economy has remained in good shape despite the pandemic. Vietnam is expected to be the best performing Asian economy in 2020 despite the fact that it has not seen a single quarter of economic downturn. According to government estimates, the Vietnamese economy grew 2.9% year over year last year, outpacing China's forecast beating 2.3% growth. Hello everyone and welcome to The Wealthy Brains. Today we're going to talk about the incredible progress of Vietnam. So how did the country make so much progress? Make sure to watch the video till the end to find out. And without any further ado, let's get started. Despite a strong economic performance in the first half of this year, Vietnam's GDP is predicted to grow by roughly 4.8% in 2021. This prognosis, which is 2 percentage points lower than the World Bank Group's December 2020 forecast, takes into consideration the negative effects of the ongoing COVID-19 wave on economic activity. The prediction was made in the most recent edition of Taking Stock, the World Bank's biannual update on Vietnam's economic performance, which was released, and it highlighted the economic difficulties connected with the most recent COVID-19 epidemic. The government's mobility measures to combat the pandemic have had a negative impact on the economy and domestically. With this performance, Vietnam has delivered one of the highest growth rates in a year where the rest of the world were in deep recessions, economists from Bank of America Global Research said in a report this year. Some analysts have questioned the accuracy of Vietnam's gross domestic product (GDP) data in recent years. Despite this, many economists appear to believe that the country's economic development would pick up this year. Let's take a look at how Vietnam became the region's best-performing economy and what the future holds for the country. Exports with a high level of resilience. The manufacturing sector in Vietnam was largely credited with the economy's outperformance last year, with production rising on the basis of stable export demand. According to economists, this trend will continue in the following years. Considering that Vietnam has been a major beneficiary of the supply chain relocation diversification trend out of China over the past several years, we see large scope for growth in Vietnamese exports in the years to come, Fitch Solutions said in a December report. The Southeast Asian country has also signed many new trade deals, including with the United Kingdom and the European Union, which might help improve trade flows even more, according to the consultancy. Sanctions by the United States, according to Gareth Letter, senior Asian economist at Capital Economics, are one potential danger to Vietnam's export growth and thus its overall economic look. Vietnam was declared a currency manipulator by former President Donald Trump's administration in December. This would allow the U.S. to impose sanctions such as taxes on Vietnamese goods. However, analysts at the Australian bank ANZ believe that the U.S. will take no quick action, partially because President Joe Biden's government may not take as harsh a stand on the topic as former President Trump. Services have improved. The services industry in Vietnam, which was severely harmed by the epidemic, began to recover by the end of 2020. According to economists, how rapidly Vietnam's economy returns to pre-pandemic levels would be determined by the depth of the rebound in services, particularly tourism. Poor, according to Letter, is the state of tourism. Nonetheless, his prediction of 10% growth for Vietnam this year is one of the most bullish on the market. By the end of 2021, we think GDP will be only 1.5% lower than it would have been had the crisis not happened. This is one of the smallest gaps in the region, he wrote. The poor prospects for the tourism sector will continue to delay a full recovery and is the main reason we expect a small output gap to persist. Retail sales decreased 19.8% year over year in July, the greatest drop since April 2020, and the Purchasing Managers Index also fell sharply. On the external front, the merchandise trade balance has been in deficit for some months and foreign investors have been cautious. The widespread recurrence of COVID-19 appears to have compelled exporters to temporarily halt operations or postpone production due to disturbances in industrial zones and supply chains. Vietnam's average income has climbed fivefold to $3,000 in the last 3 decades, surpassing countries like India along the way, and unlike most rising economies, Vietnam has managed to strike a balance between social welfare and export infrastructure investment. For a country in Vietnam's stage of development, the proportion of the population living in poverty is unusually low and the quality of infrastructure is unusually high. According to the IMF, the proportion of people living on less than $2 a day has decreased from 60% to less than 5%, leaving no one behind. Meanwhile, the government spends a significant amount of money, about 8% of GDP, on infrastructure projects such as highways and ports. The lesson for India is that the ostensible trade-off between economic growth and social equality is a myth. Rapid per capita GDP growth is what allows for human development. Vietnam also directs foreign investment toward export manufacturing. Foreign direct investment has averaged more than 6% of GDP in Vietnam over the last 5 years, the highest percentage of any rising country. The majority of it is destined for industries and related infrastructure, and the majority of it originates in Asian countries such as South Korea, Japan, and China. The old miracles are assisting in the construction of the new one. Whether Vietnam's economy will rebound in the second half of 2021 will depend on the control of the current COVID-19 outbreak, the effective vaccine rollout, and the efficiency of the fiscal measures to support affected business and households and to stimulate the recovery, said Rahul Kichlu, World Bank Acting Country Director for Vietnam. While downside risks of heightened economic fundamentals remain solid in Vietnam and the economy could converge toward the pre-pandemic GDP growth rate of 6.5 to 7% from 2022 onward. Beyond contemporary infrastructure, 3 approaches are being pursued to improve the country's digital capabilities, with the government at the center of all 3. To take advantage of the digitalization transformation, policymakers must encourage businesses and workers to acquire the necessary skills, foster innovative capacity among firms through competition and financial support for local startups and talents, and promote information access, quality, and security. To avoid being captured by public and private vested interests, these 3 policy objectives will necessitate strategic government actions in close conjunction with the private sector and in full openness. Finally, we can claim that Vietnam has had enormous progress over the last 30 years and remains one of the world's fastest-growing economies. Despite these obstacles, Vietnam has the potential to join the club of high-income countries. And who knows, maybe one day we'll be able to compete with China. What do you think about the incredible progress of Vietnam? Do let us know what you think in the comments section below, and if you liked the video, give it a thumbs up, subscribe to the channel, and hit the bell to receive notifications of our future videos. Thank you for watching and stay tuned.